start with Aviv Karuz, who's down at that end of the table, and who's from Row Ventures. And why don't you introduce yourself, talk a little bit about your background, your fund, what you're interested in.
Sure. I'm Habib Piruz. I'm managing partner at Row. We're a 23-year-old private equity firm based here in New York, $2.5 billion in management. We have three divisions: Row Ventures, Row Fund Investors, and Row Private Equity. Row Ventures is the topic relevant for this discussion, is our direct venture capital arm. Row Fund Investors is our fund-to-fund arm. Row Private Equity is our buyout arm. I spend 80% of my time on Row Ventures, 20% on the other investment committees of the other two activities. We've raised 5 funds today. The most recent is $425 million in size. We invest in IT, communications, and biotech. 1/3 biotech, 2/3 IT and communications. And we look to put $15 to $20 million per company from early stage all the way to the IPO.
Thanks. And next we have Kevin Ambrosini from Dolphin Equity Partners.
Yeah. Dolphin has about $340 million under management. Split into 2 funds, pretty equally split. We focus primarily on communications, media, advertising, and technology. My background is I was in investment banking at Morgan Stanley out in California, and now I'm with Dolphin.
Hugh Coleman, Silicon Alley Venture Partners. We're an early stage fund. We focus on web-enabled services and information services primarily. We do that in the early stage. We're generally first institutional investors in. Our geography range is from Boston to Baltimore. In terms of the stage, when we say early stage, what we're talking about is generally some revenues. Atypical for us to invest pre-revenue, but it does get done. It's just not where we try and target. In terms of size of investment, we're looking to place approximately $250,000 to $1.5 million. We're comfortable both leading and being part of the syndicate, so that 1.5 is going up to rounds of 5 or 6 million in terms of investments in groups. In terms of our experience, we've got 24 deals that out of the 30 or so that are done by our partners that are focused exclusively in information services and web-enabled services. So we're really focused on a very specific niche and try and think of ourselves as being able to offer a great experience in that particular sector, not trying to be all things to all people. In terms of who we are, we've got 2 of the team who are financial background, myself being one of those, and 2 of the team are recovering entrepreneurs. So they know where you're coming from, they've been through the funding process themselves, and hopefully that gives us a special relationship with early stage investors. Thank you.
And Venetia Contagoras from Trident Capital.
Good morning. I'm Venetia Contagoras, Managing Director of Trident Capital. I have been in the venture business for 15 years, so I'm considered here a veteran on this panel. We have under management $1.5 billion. We specialize in information technology with a special bent in markets such as financial services, healthcare, and telecom. At the same time, we are looking in new markets such as robotics. We are the people behind a pretty interesting company with the name iRobot that came out, Roomba, the little vacuum. Believe it or not, we did make an investment on that has been an extraordinary investment coming straight out of MIT. In terms of where we are as a fund right now, we are on our 6th fund. We just completed a $400 million fund. We're considered to be one of the top funds in the country, and you know that in terms of how people they pay us, and they pay us 25% on the profits, and there are a few very selective funds on that. We have extensive experience in terms of taking ideas and companies from scratch and kind of create them. And we have been very fortunate of having extraordinary entrepreneurs working with us. At the same time, myself, I have extensive experience with what has become now a very hot area, meaning offshore. I have developed about 12 different companies between here and India, and I have been one of the first people making investments in India since 1989. And right now we're looking also what kind of opportunities that exist in China. So in terms of a fund, we are very opportunistic in terms of where we're going to go, with always the big presence in the United States and Europe. The size of our funds in terms of per investment, it depends. If it's very, very seed investment, we will come with $2 to $3 million, but average, we put $15 to $20 million per company because we're participating in all of their rounds. The background of the principals, I come from operating experience. I have a very strong sales and marketing operating experience working for big blue companies, kind of IBM, AT&T, and then product development experience with Dun & Bradstreet Corporation, as well as I had my own startup. The other people in the team, my partner Peter, that he's here in Westport, Connecticut, he also comes from extensive IT background in terms of operations. His own startup that was sold to Lotus Corporation, and then after that to having top positions with Dun & Bradstreet. And my three partners at Palo Alto office, with 2 offices, they come from the investment banking type of community. What is peculiar about us, we do all different kinds of investments, from seed to expansion to special pipes, if we feel we can help the company from operations point of view.
Thanks. And so Richard from Starling Ventures.
So with Starling Ventures, we're a brand new fund, still actually in fundraising mode, but also looking for new investments. We focus on a niche in media and technology areas of companies that are post-revenue, but usually not too far along in their revenue traction. But we're also looking for companies that don't need a huge amount of money to get to break even. So a lot of what we're looking at is extremely high margin businesses who, over the life of the company, will put in usually under $10 million into the company. And this, this is an area that large funds kind of often neglect because they can't get enough money into each investment. And so we're trying to fill that niche of taking companies with between $0 and $1 million in revenue and bringing them to break even in the $5 to $10 million range. Once you're at that point in the $5 to $10 million range, you have a lot of leverage to either grow internally out of cash flow or to raise outside money at a good price. And in the later stage markets, there's plenty of interest in these deals, so you can figure out where to go from there. My personal background, I've been in the venture industry almost 10 years, both as an operator, as a product development person, and as an investor for the past 7 or 8 years. So I've been reading 500 business plans a year for 8 years, and have done that with the likes of SoftBank Ventures, which is now Moody's Venture Capital out on the West Coast. And most recently I was with a fund called Himalaya Capital, which you all might be familiar with, and I still actively participate as a board member for the companies I made, investments I made as part of that fund. So